Hello everyone and welcome to today's cryptocurrencies update for April 29th. Simple is best. Einstein said it best, everything should be made as simple as possible, but not simpler. So let's have a very simple look at the charts and see what the dominant trend is. And then we can start bottom fishing and top calling and all that stuff. But first, we always need to know what is the trend, because the trend determines how you will approach the cryptos. Aggressively, conservatively, or maybe not at all. Once the trend changes, then we can also change our attitude towards it. And a very simple way to look at those trends is presented in today's update. I've simply taken screenshots of my iPhone of the year-to-date chart for many of the cryptocurrencies that I cover. It's a simple line chart, and it shows you Cardano. This is down. We get some blips and dips and rips, but this is a downtrend. So we prefer to look lower. It's red, nothing green. Once this starts turning green, we're good. Again, we don't have to necessarily buy here and sell there. Nobody can do this. Once in a while, you might be able to get pretty darn close, okay? But most of the time, you kind of want to wait for confirmation. And these are, of course, marginal rallies, bear market rallies, so you have to be more cautious. Avalanche, same deal. Even the Elliott wave count is quite hard to discern on a year-to-date basis. It's down, it's up, it's down. If anything, this looks like a mighty corrective bounce, an A, a B, and a C wave. Okay, A, B, C for wave B, A, B, C for wave B, A, B, C for wave C. 3, 3, 3s. Very complex, very hard to forecast this type of price action, but the dominant trend is down. Look at Binance Coin. Okay, Binance Coin, also a downtrend. ABC lower, ABC higher, moving down again. Using this line chart, you can also see what it will take to establish a at least short-term new uptrend is to start moving above prior highs. The first one is here in the middle, somewhere around 450, 460. Then it needs to get here over 500. So you can use this simple plot to determine when the trend is bending from down to up. The same, of course, goes for Avalanche. It essentially needs to go back above over 100. You can clearly see the resistance level here. If you get above 100, 101, then the trend has changed from down to up because we're starting to make higher highs. Same here for Cardano. You can clearly see this important level at about 1.25, 1.2-ish. We need to get above it. Once you get above it, you can then do symmetrical projections and look for, in this case, 1.6. But we're not there yet. Look at Bitcoin. This is the year-to-date price action of Bitcoin. Bitcoin has essentially flatlined for the year, and I'll go into the two remaining options that I see for Bitcoin going forward. Very simple. This looks very corrective price action. It is very hard to forecast. Look at all these whipsaws that we're having. Up, down, back to almost where we came from for the year, and down again. This is very difficult to forecast from an Elliott wave perspective price action. Critical level here is around 45,000, probably around 45,500. The next critical level is then at about 48,000. Okay, we'll go to those numbers in a minute. We'll show clearly up in regular price charts as well. But you can see this year has been quite frustrating. It's only down 12 to 13% for the year so far, which is actually really not much for cryptocurrencies that rally some triple digits, sometimes in a couple of months. We're only down 12% for the year. Of course, we're further down from the all-time high, but just for the last 4 months, it's only down 12%. It's yawn. It's this really sleepy type of price action. Can we go lower? Yes, of course. But just to put everything in perspective, Bitcoin hasn't moved much relatively. If stock markets are down 12%, everybody's doing chicken littles and the world will end. Cryptocurrencies are down 12%. It can be down in one day 12%. So it's really nothing. So this is really, what's the big deal? It's really not a big deal. We're simply flatlined. That's from a Bitcoin perspective, flatlined for the year. There's just not much to be made. We sit on our hands, we watch and learn, and eventually this trend will change. And we know simply from this plot from your phone what levels to watch to then make projections on where it's going to go next. Ethereum, same here, down year to date. Looks like a 3 waves up, A, B, C, overlapping down, overlapping up. So to say, well, this was an impulse, but 1, 2, 3, 4, 5, you can clearly see the waves here develop, but this whole price action was overlapping. So what does it take for Ethereum? As you can see here, somewhere around 3,400, right? We need to get back above these levels, and then preferably about 3,500. That's what we're looking for. Haven't reached it yet, and of course to the downside, we have of course similar levels to watch. Luna so far is just slightly down for the year, but it had a really nice run, of course, from mid-January into March. We tracked that one pretty well, and you can clearly see the Elliott waves popping out here. And now it should be in a corrective price action lower. As you know, I'm looking for about 50 plus or minus $5 to $10 before the next rally starts. MATIC or Polygon. Now this is the most bearish of all price actions. This is pretty much steady eddy lower. This is clearly the trend. What does it take for the trend to reverse? It start to make higher highs, break back above first this level, 175. That's been on the chart for many days or 2 weeks. Then we need to break above about, I would say, $2 to $10, and then the next one. We really need to start seeing higher highs. If that happens, Polygon can easily go to $10 if it wants to, right? The sky is the limit for cryptos, but we need to bend this downtrend, which is quite steady for Polygon. Solana looks like it wants to bottom out. I continue to prefer a more complex bounce, but from a timing perspective, considering how long the decline has lasted, it seems odd to only have a few weeks of a bounce, but price is the final arbiter and not time, because price moves in time. And again, we can see the trend over the year so far is down. This one has definitely done more damage than Bitcoin. Bitcoin is always the 800-pound gorilla in the room. Same for Polygon, much more damage this year. Ripple also been quite hard to assess correctly. Down, up, and now down again. So for the year, this is a downtrend. What does Ripple need to do? Go back above 80 cents, I would say. Then it needs to get back above 90 cents. And then we start to reverse this trend from lower lows, lower highs to initially a higher high, and hopefully we'll get that to continue, and that's when the bull market starts. So this is a very simple way to just look at what are we doing year to date. Is it down or is it up? If it's down, then we know how to approach these cryptos. And this is the simplest of approaches, right? Simple is best. So that leaves us still with 2 options on the table for Bitcoin and Ethereum. I'm not going to go into detail for the other cryptocurrencies because the trend for now is lower, and I have not seen a single reversal day where I say that low is in place. It can easily, nicely continue to trend lower. We need to see a reversal day, and then we can start making forecasts for, are we going to see a bounce or a new bull trend? And for now, there is simply no reversal day at all on the charts. So why even bother? Then we look simply at Bitcoin and Ethereum to kind of get an idea what maybe the overall crypto market should do. I know there are 5,000 alternative coins out there, or all coins combined. So some might be rallying, some not. We can't chase all of them. That's of course humanly impossible. So let's focus on the big boys, right? If you focus on 1 or 2 and do those well, that's much better than focus on 100 and do all of them half-ass. That's mediocrity. Mediocrity leads to underperformance, but excellence leads to overperformance. So we still have this possibility for a larger triangle. I still view this as a primary 4th wave or cycle 4th wave. It depends on what wave degree you give this. It's all good as long as you see the 2017 high as a wave 1 and the 2018 low as a wave 2. Then it's all good. Can be very complex, but we need to break above the late March high or mid-March high, late March to mid-March high to get this going. For now, this keeps leaking lower, and we are below all the moving averages. So this chart is now starting to suggest we should look at the alternative possibility, which is a very simple one. Before I get there, please note we should hold, of course, this trend line. Okay, this can still fill itself in a little bit more down to the trend line, and then we get the breakout. But for now, this is looking lower. The alternative is this more direct bleeding lower towards 25, 27,500 for a impulse pattern. And with all the indicators pointing lower, except money flow, we'll get to that in a minute, this can still fill itself in. It would be very nice to see a tag of the, in this case, 200-week simple moving average, and then primary 5 to 100,000 can start. I've shared with you other people's work that's also still viewing that we are lacking, at the minimum, a very large fifth wave. Going from 25,000 to 100,000, potentially 150,000, is already 400 to 600% increase. If you can forego out of those 400 or 500%, 100%, you're still looking at 400% gain. So if you want to try to nail the exact top and exact bottom, it comes with very, very high risk and it's near impossible. But if you can forego a bit of the initial increase and forego or maybe jump out at the initial stages of the next decline, you can capture massive gains. But again, we don't have even an initial sign of a rally in place. So this is the preferred path lower. Once we bottom here, we have done 3 waves lower. My preferred view is for completion of primary 4 and then primary 5, but we have to remain cognizant of the fact that, as always, after 3 waves lower, expect at the minimum 3 waves back up. Regardless, this is then an excellent buying opportunity. Does Bitcoin have to follow this ideal Fibonacci-based standard impulse pattern? Not at all. It can turn it into a diagonal. It can have a shorter 3rd wave, a shorter 4th wave, a longer 5th wave. There are many variations, but this is what we go by. And so far, we've topped right here in this ideal wave 2 target zone. The traffic light is red. This still looks pretty good for this setup. What I do like here is increase in money flow. As you can see, since February, money is starting to flow back into cryptos, strangely enough, while cryptos go higher. So who's buying? Somebody is buying these cryptos, okay? And I don't think it's retail, but that's something else. So that's interesting. So somebody is expecting it's worth buying here in this down market, okay? So could it be because they're expecting a larger move here to ideally around 60,000? Or is it because they're looking for a larger move to 100,000? Either way, then it should go higher. But we don't have any signs of a reversal yet. That will require step 1, a break above last week's high. Step 2, a break above the mid-March high, okay? Somewhere around there. It needs to break above that high. Then we start to see the higher highs, and then we can start looking for higher prices. Above 50,000 can still target 60,000, which is still a nice 20% gain, which is not to be trifled with, considering in that case we might be in a bear market, and in bear markets you've got to be happy with any gains you can get. Otherwise, we'll just simply trickle lower. What does it take for this one? Stay below the high made last week, break below the February low, and then break below the January low. And then we have this path confirmed. Same for Ethereum. Ethereum is also stuck between a rock and a hard place. Remember, once we top, you don't know which path the market is going to take. 4th waves have at least 12 different patterns it can take, 12. So how on earth is one to know which path it will take out of those 12 when things start? It requires pretty much 75% of the completion of the correction to finally be able to identify which of those 12 paths it is. That's just the unfortunate way markets work. You cannot know these stuffs before it. It's going to be a flat, a triangle, a zigzag. Well, 2nd waves can't be a zigzag, so it's a flat and a triangle. Can't be a triangle, so it's either flat or zigzag. But 4th waves can be any of those and any combination of that. So here is then the triangular option shown, and it's going to be a messy rally to here, right, around 4,200, 4,500, and then we drop one more time, either to about here, 3,000, maybe the high 2,000, somewhere around there, 2,900, or we drop it much lower for more of a flat type correction. So as you can see, there's a lot of ifs. Why? Because we have way too little price information. The trend line needs to hold for this possibility, and of course we need to start breaking out above the highs we made a couple of weeks ago. Okay, so if we can break above 3,500, this path is upperable. If not, we continue to simply leak lower, which is the simple version for this wave C of wave 4, to about, in this case, the low 2000s. I don't want to go and see it much lower. Could go to about 1800, which is the prior fourth wave, but that looks about right. So somewhere around 2000 plus minus 200. And this is slowly leaking lower. Okay, the traffic light here is 4 out of 5 or 3 out of 5, 4 red. Same for Bitcoin. So for now, the trend is lower. I still think this would be here a fantastic low risk, high opportunity buying condition, because then we can rally to, I would say, 7.5 to 10,000. Believe it or not, I see nothing on the charts to suggest this is not the case, especially since all the price action since November looks more corrective and overlapping than anything else. This still looks like a nice ABC type of pattern. And then it remains to be seen if it's going to fill itself in as a triangle or as a zigzag, with the zigzag preferred because of where prices on the weekly time frame in relationship to its simple moving averages. The same for, of course, the daily time frame. It's not shown here. Also there, price is below all its moving averages. So the trend is weak and the trend is down. So we prefer to look lower. Also here on Ethereum, we can see the money flow is starting to increase. So that's a good sign. That's an initial sign that things are starting to bottom out. Why? Look, for example, here. Okay, I'm going to go back all the way here to 2019. There, that's where the official low was. Okay, what did money flow do since then? Increase. Okay, so how long did it take before we finally bottomed out? As you can see, from August to December. So that's September, October, November, December. 4 months. Okay, it took 4 months. Doesn't have to take 4 months now. And now we're as equally oversold as we were here as we're now. Okay, so here we continue to drop lower. And yes, we had a nice increase, but we're going to simply look in time where we can then expect this puppy to bottom. And we go to about 1 month, 2 months, 3 months, 4 in the summer, somewhere around there. That would not surprise me. But again, here people were loading up. Okay, sneaky under the radar, but we went lower in price, but the money flow was increasing. So we're seeing the same here, even more dramatic. So it seems like people are anticipating some sort of move. And if you put money into a asset, you most of the time think that move is going to be higher. Okay, so that is a nice comparison as well. And then we simply have to bide our time to see which of these two patterns are going to evolve. Same here for Bitcoin. We can zoom out a little bit here, maybe to 2019, see if Bitcoin has the same type of price pattern. Sorry, I'm going to go to 2018, as we saw for money flow for Ethereum. Okay, was the money flow increasing at the lows or wasn't it? So let's have a look. I'll start here in 2018. Remember, Bitcoin dropped a little bit earlier. We could see here an increase in money flow and then a drop. So we see an increase in money flow and then a drop. It's about the similar type of pattern. Look also here how the MACD started to flatline, and we're starting to flatline here as well. This is the MACD flatlining, and we potentially start to flatline here as well. So it could take a couple of months. Okay. Then we can see here as well. This is where Bitcoin the money flow bottomed there. Just want to make money flow bottomed. Bitcoin didn't. Money flow bottomed, but Bitcoin might not. So both suggest that even with lower prices, money is starting to pour back in. It did pour back out again, but we could see a similar type of setup. That's what we're looking for, is similarities in setup. So we're starting to see some similarities. Both suggested that we're getting much closer to a bottom, primary 2 and major 2, than to a top. So I like it. I think that is quite a good sign, because money flow is critically important for any asset. If money is not pouring into these assets anymore, then there's no buying. So that looks pretty good. But remember, for now, the trend for all these puppies is still down. So we have to wait our time and start to look for lows into the target zones for Bitcoin and Ethereum. I think they're going to be very critical, and then the other cryptos will most likely follow along. So for now, the preferred path remains lower unless we start, of course, making these higher highs, which for Bitcoin is above last week's high, and then, of course, the bounce high. Same for Ethereum. If we can go above last week's high and then above the bounce high, things will start to look very constructive. So that's really all there is to it for today and for this weekend. Very simple, don't have to stress anything out. But again, I think the technical indicators start to suggest we're racing more towards an important bottom than towards an important top. That's quite clear. And the indicators are starting to align quite nicely. And we now have to see if they can stay aligned quite nicely to allow for a more constructive bottom to be in place before it's ready to rally to much higher prices. And that's all I have for today. I think it's quite simple. Simple is best. Let's stick with it. Let's follow these two main options between Bitcoin and Ethereum. On Monday, I will go over the altcoins a little bit more in detail on where to expect those to go for the time being. But remember, all of them are sloping down year to date, and on their trend is your friend type of chart. So there's no reversal candle anywhere on even a daily basis. So I don't think it's appropriate to look for higher prices, but it's appropriate to look for lower prices. I wish I had better news, but we remain objective, and that's what it is. But I think that fantastic low risk long-term buying opportunity is coming sooner than later. So thank you so much for listening. Thank you so much for being a valued premium member. Again, on Monday, we'll go over all the details for all the other cryptos out there to see where we can expect those to bottom, where they can rally next. We already have it for Luna, but we can also start looking at some of the other ones. It's time to fine-tune the stuff. But for now, I think we have a very good bigger picture idea on where things are going, simply based on these iPhone charts. And of course, on the bigger weekly charts, what type of corrective patterns we're carving out. Take care, trade safe. See you all on Monday. Have a great weekend. Bye.